Hey, let's quickly revise AS22, Accounting for Taxes. Now this standard is very difficult for students. Let's try to simplify this in the next few minutes. Imagine you have two books of accounts. We actually have two books of accounts, accounting books and tax books. Now the problem is the taxation in both the books or the profit in both the books are not same. Why, sir? For example, if you take depreciation, in income tax book they might allow 100% deduction, but in books of accounts we only depreciate at 20 or 30%. Because of this, the final net profit in tax books and accounting books are not same, because of which it leads to difference in taxation, where the tax I have to pay in 1 year gets deferred to future years, or I pay tax in advance. This leads to two types of differences: permanent timing difference or temporary timing difference. Permanent timing differences are those differences where these differences in both accounting and tax books are forever a difference. For example, agricultural income is exempt in income tax, so therefore this difference is always going to be there. Temporary timing difference, based on the difference we classify into deferred tax asset or deferred tax liability. For this, instead of going to detailed conceptual understanding, let me give you a shortcut to understand this. What is the shortcut, sir? Very simple. You need to keep accounting profits and tax profits. For example, let this be tax profits. This hand is my tax profit, this hand is my accounting profits. If my tax profit is more and accounting profit is less, then what you have to do is always go from accounting profit to tax profit to match it. Therefore, you have to increase your accounting profit to match tax. That means you have to credit P&L and debit deferred tax asset. The other opposite is, let's say tax profits are less and accounting profit is more. The shortcut I told you is, what you should do, you should move from accounting profit and come to tax profit. So in accounting profit, now what you will do, you will debit P&L and credit deferred tax liability. So this is the shortcut when you should create DTA or DTL. This standard has two more concepts. One concept is what to do if there is MAT, minimum alternate tax. Very simple. Standard says ignore MAT and compute deferred tax asset or liability, only comparing accounting profit and tax profit, and don't bring MAT into this computation, because MAT is a tax in penal nature. And last one is tax holiday. Tax holiday is a concept where for that set of period, 10 years or 12 years or 5 years, income tax is zero. So in that particular period, since income tax is zero, any difference, temporary difference arising and reversing in this particular period, no need to create DTA or no need to create DTL. This is in crux summary of AS22. Thank you.